Good morning, everybody. It's not even 7 o'clock in the morning. This Saturday, 13th of June, 2020. I'm up only because I'm working this weekend. I'm still working from home. I thought, again, I'd give you some sort of outlook. It's the sun's just about rising, not yet necessarily, and it's foggy. In the background there is North Sydney, but that's beside the point. Good morning again. I had a thought about the property and the call of it dropping 40%. There is a chance that people get freaked out by all that is going on, provided that they have enough money to put down a deposit for a house, because the interest rates are at the record lows and repayments are low enough. Let's not forget that no matter how low the repayments are, if you pay $1 million for a house, that eventually you're going to have to pay back $1 million. The only saving grace could be inflation. So that $1 million ends up being really in nominal or true real dollars, say, becomes, just for an argument's sake, extreme case, $500,000. So in that case, inflation has eaten away the value of that home, meaning that the home might be nominally still worth $1 million, but because it's been eaten away by inflation, its true value is $500,000, which means it halved in value. But when you're looking at the actual number, it was $1 million. It's still $1 million. That way, it didn't really drop. The only thing is that we need to see the wage rises. So anyone who was making $100,000 would have to be making $200,000 in this new world of inflation, but that's probably unlikely. So they're going to probably pinch us a little bit there as well. So everything's going to run away, the inflation, except the wages. If anything, you'll be lucky to keep your job. I got in touch with a few guys, at least one guy that I used to work with, and he got redundant last month from a multinational US company. The whole team, 6 of them gone. I don't think he subscribes to my channel, so he won't know who I'm talking about him. But yeah, there are redundancies out there. I did think that, I know I digress, but I did think that a lot of the companies will at least try and keep the staff on during this JobKeeper assistance, which I don't know the details of. I think that employers are just saying, look, unless we're going out of business, we're going to keep these employees and just have government pay them through us type thing. Again, you'll probably laugh at my knowledge of this JobKeeper assistance, but until at least September, let the government, us the taxpayers, of course it's not government's money, hold the bag, and if things don't go or recover, we'll just shut up shop, or get rid of the staff then. Otherwise, why let people go now? But some have decided to do that, and that's another thing, because no matter how low the interest rates are, and no matter how, even if this property actually pulls back 40%, people just won't be able to buy, because it's still super expensive. Something that's $1 million that shouldn't be, all of a sudden with this drastic drop, is now $600,000. Yeah, it sounds a lot better, but it's still a lot of money to pay off eventually, no matter what the interest rate is. Yeah, so there is a chance of people freaking out with all that's going on, and just whatever little money they might have in the bank account, try and put it towards the deposit for a house. There'll be fewer of those people. And then we have the external factor once the borders kind of open up. Not that you need to open up physically borders for money to cross borders. Whoever was buying property around Sydney, Melbourne, mostly in these overpriced markets, cyclical markets, by the way, can do it still. Money doesn't care about any CV type things, whatever else they throw in the future at us. That money, I think, will be a lot more welcome now that the local money is dried up. So I can see the floodgates maybe opening. Am I reneging on my 40%? Well, it'll either be done through the inflation, or just kind of naturally where people just can't do it. Liquidity is another one. If banks get freaked out by lack of liquidity and get spooked from maybe a downturn, they may stop lending as much, because at the end of the day they really don't want their books to suffer, because they're already suffering from that net interest margin, which are compressing, which means that their margins and profits are reducing, dropping. So no matter how volatile the stock market is, I think the future is going to be people investing whatever they may have from their mobile phones and the apps, and just investing in the stock market, buying a few shares here and there, ETFs, that sort of stuff. At least it's something you can see, something it's very low cost. Like I mentioned before, on 100,000, let's call it, an investment, it's only about $100 or $110 is your commission for the online broking account. $1 million if you were to invest, just think $1 million house, you need $40,000 stamp duty on $1 million buying stock portfolio. Whoever's lucky enough to do that is only going to cost you $1,100, for example, with NebTrade or ComSec or something like that. So I know that with this volatility, it's hard to have a stomach for it. I've felt it on my own skin. I'll probably share that experience in one of the future videos. But I'm sure, like everyone else, all of us, I'll come out of it on the other end, hopefully alive, financially and physically. And that's what I've wished to all of you viewers. I appreciate you watching. I always appreciate comments. I can't say I respond, but I do read all of them. So once again, I appreciate them. Keep them coming, and we'll stay in touch. Thanks for now. I'll go back to my day job now over there on my laptop. Take care. Bye bye.